Okay, so let's kind of take a look at where we are. Obviously we got a, big kind of a chop fest going on here, and essentially we've got resistance at the 21 EMA, support here, and we are kind of down here at the 5 EMA again, which opens up the door for possibly another put credit spread into the close, because there is a lot of support here. We're just not getting those snapbacks where we're just not getting that 0.75% action. And so that happens. And when that, on days like this too, what I'll look at is also, instead of, as we get later in the day like that, also look at kind of, setting up stuff outside of the range as well. This is also, if you guys remember from the Saturday class, this is when we start looking at more asymmetrical risk to reward, where, some butterflies and things like that too. So certainly, a big pause before what's likely going to be a lot more volatility tomorrow. And of course, tomorrow, again, in the gold rooms and the options room, while I'm not scheduled to be on the mic tomorrow, I still post and plan on, trading the open tomorrow. And if I see a trade setting up, we'll certainly post it in there as well. Oh, nice. So you're able to get a quick hit there, Andrew. Very nice. Yeah, and and this stuff too, the slow action like here isn't necessarily bad. And even today when we got out of the trade we were in, it was coming off a little bit. We kind of went right back to from whence we came. And so that does, that's always the tricky part, is that one thing I've found is that, you get those moves when it's like, oh my gosh, it's 20 points against me. Oftentimes it will slingshot back. But it's like one of those things, 80% of the time it works 100% of the time, right? It's just, what about that one time that it just keeps on going? So I think it's good to have some rules and stick to the rules, and then just look to kind of crank it out. Yeah, and look, we had one trade today, it didn't work. That happens. And this has been last week was a stellar week. This week has been actually a pretty great trading week. It's been pretty fantastic. And then we've got today, it's a little bit of a choppy day. But the main thing, of course, and the idea of a class like this is to make sure that you understand kind of like, the tools and things that we're looking at, so that we can kind of go out and do this, on your own. Or if if you're following my trades, that you at least understand, it's like, okay, yeah, that's the trade he's doing, and I get it, and I understand why he's doing it, and all that kind of stuff too. And if we go back here and we just kind of look at the, the simple, what I call the simple James chart, this is chop suey right here. We can't even, that's why it's such an important filter, I think. If we can at least push away from that 21, that gives us that snapback, to it, which is a pretty clean trade. And we're not even able to get that in this environment today. So, yeah, and one of the things you'll find too is just it's how it can be pretty clean scaling in, as well. And then you saw today that, yeah, we got out of the trade, we took our 2-point stop, but then shortly after that we were at even. So what do you do the next time that happens? But remember, just kind of keep it in mind. This is one of those. Let me see if I can find this. Yeah, it's just kind of, it's the slow and steady wins the race. Remember, if we average 1% a day, okay, that's 1,200% a year. And I think it's so important to understand that. And if you can, up that to 2% a day, right? It becomes real money pretty quickly. The main thing is actually having a plan, a business plan, and following it, and not having any big losses, right? That's obviously the cardinal sin of trading. And then not being afraid of losses. It's like I'm always kind of amused in trading when sometimes a trade doesn't work, and it's like, oh my God. And it's like, this is a probabilities game. So, even like in the higher probability trades where you're selling a 2 standard deviation spread, yeah, guess what? That's going to work 95% of the time. But the one time out of 20 it doesn't work, you're going to lose all of the profits you made on the prior 19 trades. So that's actually not, a high win rate is, I find that folks that kind of have to gravitate towards a 96% win rate really need to do some inner work. Like their ego can't take having a loss, when all you got to do is reframe it and say, okay, my job as a professional trader is to have a plan and follow a plan, and part of that plan means that, you know, if the trade gets to X and it's not working anymore, we cut it loose, and then you move on to the next one. So that's the different stuff that we look at too. Yeah, now some of the stuff too, of course, if you guys are, you know, some of the other tools like to look at, multiple squeezes and stuff like that, you can see we've got squeezes set it up on the hourly and 30-minute and, you know, all that kind of fun stuff. And certainly one of the things that's nice about this is it enhances all these other tools that we've used over the years. You know, this certainly enhances a lot of them. What am I looking at? The hourly? Yeah, that's a good point too. I mean, it's like in trading, it's like, you know, everything's pretty easy. And the whole point of trading is being able to kind of like, while you're in the moment, how do you generate um, income in the moment when you're not necessarily sure what's going to happen next, you know, and that's trading. So, you know, we're sitting here, we got this, obviously the big pop here. Yesterday we dipped, we kind of came back, you know, are we going to get a rally back into the close today? It doesn't seem like it. We may just end up puttering around here at the lower end of the range. We're at 37.42. As we get closer to the end of the day, then the kind of the key levels come into play, like 37.50, 37.25. You know, sometimes there's trades around those levels as well. If we see kind of the hourly squeeze here, we're just kind of hanging out and sitting there at well too. Yeah, the other thing too is that now, you know, the tough thing with the spread that we're in, you know, one of the things I'd mentioned is that the longer we're underwater in it, the worse it's going to get, right? So we sold the 37 75 is what we sold. And so then we kind of came down, but then we kind of came back up, right? And so, you know, and this is always kind of tricky because it's there's this, the most important thing here is there's this window, um, you know, prior to 11:30, there's this window of what I call forgiveness. So before 11:30, there's a window of forgiveness, and you can kind of play around with it. You know, if it kind of goes against you, and we're before 11:30, you know, the spread's not going to deteriorate too badly, simply because both of the premium's still kind of, you know, hanging in there. But past 11:30, then what starts to happen is that the premium erodes, and then you'll see, like, so that spread, yeah, now if you were still holding on to it, it's, you know, it's near max loss, and that's unacceptable. You know, there's no reason to have any spread with this type of trading go to max loss. Um, so now let's kind of see here as we're kind of looking at kind of what's setting up is, you know, what kind of picture do we have here? So if we look at the rotation, we're having essentially, you know, first of all, are we going to get, you know, are we going to get a move here where we're 0.75% away from the EMA to the downside? That would be great, because we actually, the only time that happened today was this morning, early in the session. And, you know, we came down fairly quick. And so now the question is, are we going to be able to get something here kind of, you know, towards the end of the day where we get some kind of a flush down and then, you know, start to maybe work our way back higher. So that's what I'm looking for here. Let's see. You know, earlier we were talking about, you know, SD versus, oh, that's also SD. Oh, these are just different colors. You got the 30 and the 5. Oh, here we go. You know, so the story here is going to be about the same on all these. Now, of course, this is going to look pretty squinched because I chose to be able to see all, you know, everything in here. So let me just kind of come over here, go to price access, uncheck, uncheck. And same thing here. And we can see the theme here is that we're rolling, we're coming down to this 5 EMA. And really the trade I'm looking for here is that can we get 0.75% away from the 21 for a snap, kind of a snapback. And then let me see how we're looking at on the yes here. And ES is about the same here, 0.55%. And then keep in mind too, and especially on Thursday, Friday, I mean, the stocks are starting to lose a lot of their premium too. So certainly there's, setups to kind of look at on those as well. I was curious. Let me see how Tesla's doing here too. So on Tesla here, what are we at? 177. Yeah, I mean that we're kind of, right here, right at that 21 EMA. Let me see what the Qs look like here. Yeah, so you're going to have, of course, yeah. So on the 1 minute chart, you're going to have red bars because it's rolling over, right? But if you're starting to see a rotation start to turn, you're going to have green dots. So yeah, those would absolutely go together. All right, Q's here, still the same. So again, we're just the market's the same across everything. We just got this slow kind of roll back into the daily 5 EMA. This is the rising 50 EMA on the hourly chart. Yeah, so if we can get the snapback trade, then there's a couple. So here's what we did yesterday. So we had a pretty fun trade yesterday into the close where was that, let's see, where is it? Wednesday. Was it here? Yeah, it was right in here. So um so we had two trades yesterday into the close. So the first thing is we came down, we pulled back to the 8 EMA, and then we sold the put credit spread. And then as we started to rotate and turn higher, we bought a $5 wide call debit spread for like $1.50. And so the put credit spread, we sold it, we bought it back for 20 cents. Once this popped, the call debit spread, we bought it for $1.50, we sold it for $3.50, as we popped into here. And so those were pretty quick. And so, the question is could we do something like that here if we can, come back enough and get a snapback? The first thing I'd look at is, well, let's do a put credit spread. And then if we start to turn, is there a call debit spread we could do around 37.50 to see if we got kind of get a move back into that level. The snapback trade or continuation trade, which one, kind of works better? Well, the premise of this is the snapback trade. So that's kind of my favorite, and it works good in the stock market because the idea is that, people get enthused and then it comes back and all that kind of stuff too. But remember, from a trend perspective, the continuation trade is just simply a trend trade. So, and you've got a strong, this is some strong action here, right? We grind up, we come back. Well, when we come back into these zones and we get buy signals, let's buy the dip. We're going to run that sucker, continue running it higher, right? So this is, so this is a good example of a continuation trade in this zone, where we get this huge kind of massive thing up and we kind of drift back down into it. And then this is a good example of like, oh my God, we really flushed here. We got the arrows and then we snap back. So part of it is also personality preference. I find that for the snapback rallies, some people can't do them. They get too nervous. But the reality of it is that when especially in the stock indexes, at the time that it looks like the absolute worst idea to go long, like in a snapback, is usually the best time because you get those flushes to the downside and all that kind of stuff. It's just kind of keeping in mind that as we talked about during the Saturday workshop, how the markets always kind of ebb and flow. They're never gonna go up forever. They're never going to go down forever. There's always just kind of this ebb and flow. And today is just kind of unique, is that we're seeing these ebb and flows like in slow motion. We've been used to watching these ebb and flows very, very quickly, and now we're just kind of getting some slow motion kind of action. No, so Steve, if you're doing the same thing, 0 days to expiration, if it's in the Qs, SPY, I mean, it's kind of the same idea. The only difference would be is like, so on Friday of last week, I did sell some put credit spreads in Tesla, and I think I did end up doing 40%. It popped up pretty good, but the day of expiration, because you only get a 0 DTE in the stock index in the stocks like on Fridays. So I will look at individual stocks on Fridays as well, simply just to kind of take advantage, because typically they've got pretty good premiums too. How would you place risk your trades? No, okay, so good question. So do you do more risk on snapbacks or continuations? So really it's based on the time. So to me, the best trades are before 11:30, generally. As you get towards the end of the day, whether it's a snapback or a continuation, I want to use, I'm going to use bigger size, right? After 11:30, the market does change, and I typically will kind of drop the size. Now today we did the Iron Condor overnight. If you guys were in the gold room, so we've got a profit on that trade. But then we did the trade, of course. Here we lost $2 on that one. So we're kind of sitting here where it's like, all right, well, we're down a little bit on the day. So do we go crazy here and try to get profitable on the day? Well, the answer to that is no. We're not. You don't want to put that pressure on. It's just, is there a viable setup or not? Dun dun. Well, and remember too, and keep in mind, everybody in here has access to. So when I say the gold room, that's the options room. So the options room and the gold room. And the beauty of it is that I think all you guys have at least 30 days, if not longer, in there. We're going to see all kinds of market conditions. And so the idea with the live trading is that we want to be able to kind of do a deep dive, see how things, how understand, we had a good talk this morning, understand the difference between the dots and what the arrows and which chart and all that kind of fun stuff too. And then obviously, we all want to do live trades, and especially ones that are profitable. But the most important thing is just like, there's going to be multiple kinds of market conditions, and just being able to understand it. And so the idea, especially by you guys and gals all having access to the gold room / options room, we're going to be able, we're going to continue, and especially when I'm on the mic, and especially because I know there's a lot of, as people are following this and learning it, I certainly can, use a lot of my time on the mic simply looking at this setup right here, and we can go through it. And so there'll be all kinds of deep dive kind of stuff that we can do there. Yeah, gold room, options room, same thing. So, and generally, and my schedule can change just depending on what's going on, but generally I'm there for the morning on Tuesdays and Thursdays, and I do the close on Wednesday. That being said, um, I also will post trades when I'm not on the mic, and honestly, a lot of times that's easier. Um, you know, Being on the mic, answering questions, and looking at the market and placing a trade, that's a lot of moving parts, and so sometimes it can be easier. Like, so even if I'm not scheduled to be on the mic, like on a Wednesday morning, I'm looking at the markets, and if something sets up that I like, I'll post it. And oftentimes that's the easiest way to post trades, because it's just like, all right, cool, I'm just going to watch the charts here and see how this sets up. No, so that's a good question. So what about, so there's what I call trend days. Trend days are typically like, so if, like Monday and Tuesday, like Monday, the markets were up over 2%, right? And so one of the questions come up is like, okay, are we going to short this? I'm like, no. Okay, so if the market's up like 2%, that's a very strong day. And so as an example, like, if we're like this, instead of trying to fade it, like why fight that strength, we would wait for a continuation trade. But that's rare. 2% is not common. I mean, plus or minus 1% is, a little bit more the norm. Yeah, so anytime, and just you can make sure that your settings are enabled. But when I am posting trades in the options room, um, we do have our app, and of course they go out as push notifications. So you can say like, oh gosh, John's doing this put credit spread. You're going to understand the trade because it's like, oh yeah, I know. I'll even label like, hey, this is a snapback trade. Here's my target, and then you guys will kind of know what's happening and stuff like that too. So what I like to do is I actually like to wire funds out. So my large account's a 7-figure account, and then what I like to do is, at the end of the week, I kind of wire out most of the gains. So I just kind of keep that base amount, and for me that just kind of works pretty good. And then for smaller accounts, I'll actually let them build up. So it just kind of depends what your goals are. So with my $6 million account, I'm like, okay, am I going to be happier if it's 12 million, right? Or is it okay if I just, wire money out every week? So I'm cool just wiring money out every week and just kind of keeping that base level there. And then a smaller account, it's like, okay, I like to do smaller accounts just because it's like, all right, here's, if I can get this, how long does it take to take this $50,000 account and run it up to 100? And then, and I'll share those trades as well. Yeah, so the one thing here in the last hour, so as I'm kind of so what I'm doing here is just watching like, okay, I mean, and again, it's kind of a sloppy mess, right? It looks like the SPX may just end up hanging out around 3750. That's and that's called, it's kind of like sometimes, they just kind of close kind of near that level. And so I might look at something like this and say, well, okay, we're starting to turn higher. What if we went down to 3730? And, at this time of day, is there enough premium there to get out of? Oh, this is a trade my youngest son did using the charts. So he did this and just sold a put credit spread. So he sold the put credit spread on Google for $1.70. It's like 22 cents. And he's supposed to get out at 20 cents. I don't know why it didn't fill. 24. Okay, there's that. All right, so if we go back over here to SPX, and we can say like, I'll bring that back up. So we're at 3750, right? So if we went down to say 3730 and we wanted to sell a put credit spread, so we could, and you can see it's only about a 60-cent credit. So if for some reason we dropped really quickly, then that's something we got to deal with here. And now, of course, it's been a weird day. Like we're getting a snapback here, but we didn't get that 0.75% away. This is that lower band there. So you're kind of getting this weird action where we really want that little extra push so we can get that. But this is very typical where, you kind of come down, you get to that 0.7%, and then you kind of start that process of kind of rounding up, and then you kind of get shorts covering. And now we're here. So it's likely we just end up hanging around 3750 here. So this is kind of also, towards the end of the day is where we look at, potential kind of what I call, for lack of a better term, I call it asymmetrical trades, where we can set up a trade where if it doesn't work, it's not the end of the world, but if it does work, man, that was a pretty sweet trade. So if I look at this, like the 3750 strike, and just say like, okay, well, what if we did this $10 wide, and this is just kind of a bet that we just kind of, it's been a choppy day that we just kind of hang out around 3750. Well, we can sell the $10 wide at the money iron fly for $7.70. So if we look at this on a one contract basis, essentially we've got a max loss of $225 against a max profit of $775 per contract. So it's a pretty good risk to reward ratio. And so I kind of like that, and it bodes well with it. Just, it does well with chop. If for some reason we end up right at 3750, then that's great. But the reality of it is we're not trying to get max profit. If we can sell it for 765 and buy it back for 4, that's great. So let me see. I like to do these close to $8, and we're close to $8. So let me see if we could get 765. 760. I'll try 760. All right, this is working. And then we're filled. Okay, so let me post that. And so the idea with this trade is that, we're just kind of like, so what I found sometimes is during the close like that, this 8 EMA becomes kind of a magnet as well. And so, if we just got some choppy action here, that would be great. And so this is what I mean is towards the end of the day when I'm doing trades, in the morning we were like, if you're selling a $10 wide spread for $4.50, you're risking 650 to make 450. Towards the end of the day, I like to actually improve the odds a little bit and give ourselves a little bit more wiggle room. This is an at the money and fly around the 37.50 strike. Oh, Otis, it was painful, kind of painful for me in a good way. Just watching how I'm like, he's just like, oh, he's just doing this simple thing. And that just got me to asking myself, like, well, maybe I can simplify what I'm looking at. So yeah, it was pretty interesting. And then one thing we have been seeing in these markets is that they have, I mean, and today could be different. They have been kind of selling off into the close. So if we got a little bit of a grind higher here and then kind of came back to 37.50 into the close, that'd be great. And then the other thing I want to look at here too is yeah, I mean, so if you did like a $15 wide spread, you get a larger credit, right? Oh, grabber blue. That's in. What's interesting too is that this does. Yeah, I mean, you'll find too that stuff like that, like dynamic profit targets and all that. There is, that there is a lot of stuff that kind of ties in together. But I do appreciate the simplicity of this. Yeah. So for a closing order, generally on something like this, it's again we could look at about 40%. 40% is a good target. If we're going to be slow and choppy, that's great. This is an area where we want it to be slow and choppy. The longer we kind of hang out here, the better. Yeah, so it's a good question. So, what's more powerful? Is it 3750 SPX or, 3750 ES? I have found that SPX drives it, and remember, futures essentially reflect cash. So, kind of reflect the cash index. So you can see that while on SPX, we're looking at 3750, the ES futures are hanging out, here a little bit higher. So the equivalent would be, yeah, 3765 or something like that. Yeah, so if you're familiar with butterflies, you could absolutely just buy a butterfly at 3750 as well. So it's kind of the same idea, just the opposite, the opposite idea. You're doing a smaller debit instead of a larger credit. What about overnight? Well, no. So yeah. So overnight, then you're gonna, the ES is gonna have the activity. So wherever the ES futures open, the SPX will reflect that. Absolutely. And then for tomorrow, because we have non-farm payrolls, tomorrow the implied volatility is pretty high, and so generally on something like that, I like to just be flat, and then we can just kind of as we go into the open, just kind of see how things, how things are looking and stuff like that too. No, Rick. So no, that's a great question, and I like it. Yeah. So you absolutely could do that. So again, let's say that you're setting up a trade. We're here, and you don't necessarily want to watch the trade all day, so you just do a deeper in the money put credit spread. So, you know, $10 wide, you could sell it for $8. So if it doesn't work, you lose $2. But if it does work, you make 8, and you just leave it alone and walk away. I actually love those kind of trades. Yeah, I think that's great. Yeah, so that's the other thing like this too, is that, you know, there's once you understand the basics of, all right, you know, we came down, we got too far away from the 21 EMA. Unfortunately, you know, we just didn't get to that 0.75% threshold, you know, which is fine. It's been kind of a weird, choppy day. But once you understand kind of the nuances of how that works, then it's like, okay, you know, there's a couple different ways to skin the cat, right? One question I get asked is, well, why not do call debit spreads? You know, so if we're here, you know, why not do a call debit spread here? And the answer is you absolutely can. It's a better ROI if it works, but um, you need a decent move for it to work. And those call debit spreads, they tend to do better towards the end of the day when you start getting that premium decay as well. Do you need to buy back to Iron Condor if it's on the ES? Yep. So on the ES, if it's in the money, you will get assigned. You'll get assigned the actual futures contract. Now, if your account is large enough to handle that, that's fine. And sometimes I'll take assignment on purpose, and then just close it like 2 or 3 minutes later. You have that 15-minute window before the overnight margin kicks in. And then of course the SPX then is cash settled, which is kind of nice. Now the ES does not cash settle, so it would be cool if it did, but yeah. And remember, towards the end of the day like this, the decay can really kick in pretty quickly. Yeah, you don't want to really hold it. So if you hold the ES past 315 Central, what happens is now it's logged as an overnight trade, so the margin will increase on it quite a bit. Like it'll go to max margin, which is fine. If your account can handle it and you're familiar with it, that's fine. Personally, especially in this market, I don't like holding futures overnight. You're getting these 30, 40, 50-point swings overnight. No thanks. Does SPX count as a day trade if it cash settles? Cash settles. The answer is no. But somebody told me that Schwab actually does count it, but I think they may have talked to an intern. 37.35. Okay, good to know. I mean, I do them on toss, and they've never been counted as a day trade for me. So it may also depend on the account structure. And of course, again, the way around it is you could do just ES options. Would you say the decay is way less in ES than SPX? That's a good question. I mean, I think they decay about the same. Yeah, I think they're about the fine. They are about the same. Yeah, okay, Carl. Carl's just saying I trade a small account on toss, SPX cash settlements never count as a day trade. That's what I thought. So it may just be, it may depend on the type of account you have, or it may be an auto-generated email. It shouldn't count as a day trade because you're not actually exiting. And then the ES options again do not cash settle. SPX, yes, cash settle. Um, ES does not. All right, so we're getting a lot of chop suey here, which is good. It's good for our trade. Let's see, we're at 230. Let's see. And we have a lot of negative action here. Everything's pretty weak. The other thing I'm looking at is that, is there an opportunity for a call credit spread here? But it's just we're getting to the part of the day too where there's not a lot of premium. So like the 37.30, 37.75 call credit spread, $5 wide, you'd get 15 cents, right? Not particularly attractive. Um, Yeah, I think we're good. So we're good with this. I mean, we've got a nice asymmetrical trade. Again, I'm not planning to let it cash settle. If we can just hang out around 37.50, gosh, for 10 minutes, we'll get some nice premium decay on it. Yeah, man. So I've just found that the last 10 minutes of the market have been pretty weird. So, if we can just kind of hang out around here for, until 250, which is 12 more minutes, 13 more minutes, that would be ideal. Yeah, the 10-minute plank. Yeah, so what you want to do, buy, sell, call. So if you look at how it's structured, I mean, you're basically just selling, it's just an iron condor, but it's at the money. So I'm selling the 37.50 call, and then I'm selling the 37.50 put, right? So that's like the naked straddle, right? But then I'm buying the 37.60 call and the 37.40 put as protection. So think of it as a naked straddle with protection. And then if we can stay quiet here for the next 10 minutes, the premium should really start to drop. That's the big if here. But again, it's in terms of it just being a choppy mess here, that's great. Choppy mess, good. Let's see here. Well, so lunch, good question. So one thing is, okay, what about this kind of iron condor first in the morning? In the morning, it's horrible. And the reason it's horrible is you don't get any premium decay. What's nice about this time of day is that the premium decay really kicks in. Lunchtime, it's okay. It's, I would say, negligible. If anything over lunchtime, I might even sell like an out of the money iron condor. If you want to play around with it, like outside of the Keltner bands. What is this level right here? 37.52. I wonder if that's the 5 EMA, and it's just that it's colored pink for some reason. Let me double check. I mean, yeah, it's got to be. Yeah, it's like to make sure these are the same color across all time frames, so I'm not thinking it's something else. All right. No, the Iron Condor expires today. The one I'm doing expires today. Yeah, I'm not planning to do anything overnight just because we got those employment numbers in the morning. Yeah, so that's what I thought it was my Keltners, but it's not because the Keltner's way down here. So I had this as pink. I was thinking like, why is that the Keltner? But it was actually the 5 EMA. So I just want to make sure it's, the same color across the time frames. Yeah, I'd say round of applause for Lorna for keeping up with all the questions. And also what I like to do too is I do like to see kind of like what the themes are. As the questions you guys have. So, even though today is kind of our last live trading day together, keep in mind, two things. First of all, be sure to take advantage of the options room. If you're in that trial, remember, I'm going to be covering this. Every time I'm in the room, I'll be posting trades using this stuff. So even though this is our in-depth time together, it's not the last time we'll be working together, right? And then the second thing too is that as I see your questions, I'm gonna, I'm continuing after today. I'm gonna continue to update that PowerPoint deck that we have in the class folder. And on this one, I'm gonna need a few more days because I want to grab some more slides. But based on the questions I see, I'll document more stuff, and then just be sure to go back and review it. The thing about it is when the great thing is like so during our first live trading class, right, it was pretty great. I mean, the trades worked out nice; they were easy. Today's is a little bit sloppier. That's fine. it's good to see different kinds of stuff. But then remember, just make sure that, even if you can't be in the room, um, full time, we get alerts. We do have alerts and stuff like that that are happening. All right, so we are at almost 245 here. No, so in the alert, calls it an iron fly. So I've never really been one for names. So I always joke that I call thing like, I just say I'm gonna sell a put credit spread here, and someone will ask, well, is that a bull put spread? I'm like, yeah, I think so. So to me, an iron fly, uh, I'll call an iron fly an at the money iron condor, and just so you know, to me it's the same thing. TLRY is back. Is it back? It's going crazy. That's funny. God, I haven't seen that stock doing anything in a while. Ha! That's funny. It's high. A marijuana possession charge? Oh my gosh, that's going to revolutionize the legal industry. The irony is, I think I saw something where, the people that have the most experience to participate in the legalized, where weed is legal, can't because of their felonies, whereas they actually have the most experience. Yeah. So one of the things we talked about during the Saturday class is probably the biggest differences we look at is that in the morning session, we're not looking at what I would simply call asymmetrical risk trades. Like, we're not looking to, like, do an out of the money, call debit spread where we're risking, 1 to make 5. We're actually like, okay, we're going to do a fat in the money spread, and we're going to get out if we can get a 40%, which is, not asking a lot. Now, towards the end of the day, like right now, if we were going to do, say, an at the money put credit spread, it's really a directional trade, because if it starts moving against us, we could hit max loss in 10 minutes. Okay, that will not happen in the morning. So towards the last hour of the day, I like to look for trades where it's like, okay, if this doesn't work, we lose 2, but if it goes to max profit, we make 8. But it's still just kind of, so it's just a little bit more, it's just what's called asymmetric risk. All right, so we got 15 minutes left. We are sitting here, we're still hovering, right? We're at 37.48. See if we just kind of hang out here a smidge longer. Brass turkey. Brass monkey. Brass monkey. Yeah, so, and if you're newer and starting to kind of figure out what the spreads are, sometimes the alerts look a little goofy. And that can take a little minute. One hint is that the action word sold, it always applies to the first contract. So it's like, okay, we're selling the 37.50 and then buying the 37.60, and it's a call. So it can take a minute, but once you understand them, the butterflies, honestly, yeah, they can be, if you're not really familiar with it, can be confusing, but and I can always post like, hey, here's what the trade looks like, and stuff like that too. Yeah, awesome, Laura. I got to tell you, I've really embraced this in terms of just the idea of, not worrying about what's going to happen over the next 3 weeks and all that kind of stuff. And I'm really I hate to sound what's the right term, like a cliche, but it's kind of like, oh, it's like less stress, more money. Okay, awesome. It kind of moves away a little bit from what I would say maybe used to be like, oh my gosh, we're setting up this trade and we're going to hold it for 3 weeks and try to turn it into a big trade. So it's not really doing that anymore for now. At some point that might make sense. Yeah, sleep better, So I like it for sure. All right, we've got we're getting close to 10 minutes to go. So James liked the snapbacks, he just that just made sense to him. Like, oh, there's arrows, we're going back to that level. Yeah, and that's actually a really good question. So, one of the things is like what was great about watching James too is that he had beginner's mind. He hasn't had the market kicking his ass for like the last couple of years, and anybody that's been trading has had certainly had their share of ass beatings. And so he just went it with a beginner's mind, and that was actually fun for me to watch. We should always try to emulate having a beginner's mind. And he just really embraced that, which was great. All right, so we got about 10 minutes here. So last 10 minutes, generally at that point, the market can kind of do about anything. So let's see here. In a perfect world, it would pin right at 37.50, but I never kind of count on that. It's just kind of like, okay, we sold it. Can we buy it back for cheaper? And either, it gets to what I would simply call, that 40% level, which I think would be about $4.50, or we get to where about 10 minutes before the close and we just kind of get out. The last 10 minutes is really kind of a wild card. And then the other thing we can do too, of course, is you can scale out. It's like, oh, okay, I'm gonna sell half, and I'm gonna let half run. See if we do get a close right there. There's a few things like that to do as well. So we're hanging out here. We're right at 37.50. Let's see, where are we at 6? All right, so again, the last 10 minutes here can be a wild card. We got a decent profit here. We're not at 450, but we are at 250. We're not at $4.50, but we are at 250 in terms of time. So let's see if we can go ahead and just kind of ease on out of this. If you're feeling lucky, you can just hold it into the close and see, do we pin? Do we pin there at that level? We're at 37.48, not bad. 37.48. I'm just seeing if we kiss 37.50 again. Let's see. Yeah, so we're about around 580, like 6. The longer we hang out right here, the better. But remember, in the last hour, the last few minutes, the market can move pretty fast, and so we're sitting at about 9 minutes now. If if you're feeling like balls of steel here, and you just want to hold into the close, you can. But I want to go ahead and close it out, and let's just book the gain because it can be the last the last 9 minutes is kind of a cowboy area. So you should be able to get out here about 6, give or take, but don't screw around. You just want to get out. All right, get that posted. So good to make a little bit of it back, but now the money shot, of course, is that if we end up closing right at 37.50. But again, on something like this, typically it's like if you can sell it $10 wide for close to 8, buy it back for 6. That's not bad either. Good stuff, good stuff. So, again, so just kind of an example. That's kind of like as we get towards the end of the day, that's kind of the trade I like to do. And then, the last 5 minutes is just, it could go either way. It can go anywhere. Sometimes we try to do pinning, where, if you can kind of get close to where it's going to close, and it's nice when they work. But it can be imprecise, it can be imprecise at best sometimes. No, I mean, it's a good question. ES may hold on a little bit more. But also too, just remember which strikes you did, because SPX we did 37.50. For ES, you'd want to do the equivalent would be like 37.65-ish. The closing order, no, you definitely want to do a limit order. If you do a market order, they will screw you. But you should be able to get out here. I mean, I think you can get out here better than we did. So, it's I got 6. I think if you're still got it, you can get out at a better price here. 575, nice. Let's see who gets the best order. So yeah, I'm a fan. So I actually, if I'm trading ES futures, believe it or not, I like to go market in, market out. If I'm trading off of a signal, like one of these signals, limit orders on the futures kind of drive me insane sometimes. But for spreads, market orders are tricky. 580, nice, okay. Wow, we came back to 37.50. Now, if we pin at 37.50, that'll be great. But I didn't hold on to the close, so it won't benefit me. But it gets a good. It's a good example of what can happen into the close here. Nice, Randy got out at $5. Good work. So this trade was a little more kind to us than the other one. So it's good to have both. You want to have one that makes you think and rethink your life goals, and then another one that's like, oh, okay, well, let's make trading great again. So it's good to have both, but it's just to kind of see what to do if things don't go exactly as planned. Yeah, $6 is a solid exit on this one. And let's see, coming down a smidge. Yeah, the theta decay is really kicking in now. But see, now the tricky part is, where is this going to end up? If it ends up right at 37.50, that's great. But we could go plus or minus 10 points in the last 5 minutes. Oh, is that 40% now? Nice. All right, let's see where we close here. DJ, good question. So how do you evaluate your trades at the end of the day, to kind of improve? Yeah, that's a great question. Let's let the market close, and we will have a discussion about that. Market will close here in a few minutes. Yeah, okay, so why 40% and not 50%? So I tried 50%, I tried 60%, I tried others, and they would never hit in the morning. So here's this is where it all kind of came together for me. If I do a trade at 9 o'clock in the morning, and I do I sell a credit spread, the only way I'm going to get, like, say 80% of max profit, which is kind of like what I normally would do if I was trading like a stock option, is it won't hit till the end of the day. So that means I got to be right all day long. So it just brought up the question, like, I don't need to be right all day long. I just need to be right for like 40 minutes, based on the signal. So what's a good target if I'm going to be holding a spread for like 30, 40, 50 minutes? And I it's trial and error, but 40%. Now, there's oftentimes I get out at 40%. I'm like, man, I wish I still had it. But there's other times I get out at 40%. I'm like, thank God, because it just, it could roll right back over. So I just found it's a low-hanging fruit target. And that's kind of, so I came up with it with trial and error. Yeah, and it's an interesting close here. We're just kind of walking down a little bit. Well, so the nice thing about, so let's say like on this iron condor, you get right now it's at 341.77, right? So if we closed right here, well, no, we sold it for what, 740. So a lot of times these $10 wide ones, if you sell it for 8, and let's say you just don't get out and you just hold it, and we close here at 37.44, you just made 2 points. So it cash settles, you make the 2 points, and you're good to go. So what's nice about the iron condor too is it's also kind of forgiving, where if you just let it run, you don't have to close at 37.50 to make money. You just got to close within the credit that you established. And because, remember, you're, generally you're risking 2, in this case to make 8, you can afford to walk away. All right, so in this case, if you let it cash settle, we're at 44.41, right? So if you let it cash settle, and we sold it for like what did we sell it at? 780. And so essentially 44, so that means that is about 560, right? So 780 minus 560 is your profit. So if you let this cash settle, then you made $2.20, give or take. Yeah, I mean, close, right? Okay, 760. So anyway, so hopefully that was helpful. So the moral of the story here, in the trades that I found useful, is that I just kind of divide the day up, in its simplistic form, is there's 8:30 to 11:30, and there's 11:30, 11:30 to 1:30, and then there's 1:30 to 3. So here I'm kind of like in the money credit spreads is basically the only thing. Anytime I try to get tricky and do other things, I always regret it. So somebody was asking earlier, like, how do you evaluate? Okay, so I was trying to do these with NDX, and I've just learned that if I really would like to be able to look at myself in the mirror the next day, stop doing them on the NDX. It's great when they work, but when they don't work, they're like impossible to get out of, whereas the SPX is actually pretty liquid. So so basically I would say 90% of the stuff I'm doing is in the money SPX credit spreads. Okay, wow, that makes my life pretty simple. 11:30 to 1, I'm I just call it my get away from the get away. Are there exceptions to that if the market's really insane, once in a while, but I really try to respect that. And then 1:30 to 3 is more like butterflies, iron flies. Yesterday, and then sometimes I will do out of the money put spreads. Yesterday we did an out of the money credit spread and debit spread. They worked great. And then today, because the market was just choppy, we just did that iron fly. So I mean, if you want to meet your 1% or 2% or 3% goals, this is it right here. 8:30 to 11:30, you do SPX credit spreads, snapbacks, or continuation. That's all. Honestly, that's all you need. This kind of stuff is more fun. I just call it the cherry on top. It shouldn't make or break anything. I mean, today's trade was was a nice one to end on. But this shouldn't be the core. This is the cherry on top trade. This is kind of like the moneymaker. So for all the reasons we've talked about, and not only do you have that 60/40 tax treatment, but you're able to. They're pretty forgiving. If for some reason it's not working right away, you can kind of hold on. Even today, had we kind of held on, we could have got it and out at break even, right? And that's always a tough thing, because we were hitting that cutoff point at 11:30. I kind of like want to be, after 11:30, that premium decay actually really kicks in fast. And so if it would have been like 10:30, it's like, okay, yeah, we can give it a little bit of room here. And so that's what I evaluate. So I just kind of look at like all the things I found that I've really got to be careful of is so I find that there's some days where I like, wow, I'm up 4% on the day, and then I'll throw in another trade that loses money. I'm like, okay, now I'm up 2% on the day. That's not sound trading. That's more, it's like, oh, okay, be careful. Don't just try to make money. Did you have a setup or not? So I just look at days where it's just kind of like, okay, where if I made money or lost money, it's like, did I follow the plan? Okay. If I didn't, did I get lucky and be honest, or did I find something new that I should consider? But what I found is that the more complex I try to make it, there's no reason to. It's just, if you can do one or two trades like this a day, you're golden, just from that early morning, that morning session. And then if you're working, sometimes, question is like, well, what if you're working? And it's honestly, that's a little trickier. But what the nice thing is, if you're working, what I have found is that, essentially it's a little bit, you got to sometimes trade a little bit smaller size. And, you may have to go a little bit deeper in the money to get a little bit fatter credit. And so let's say you're able to do a $10 wide, deeper in the money for 650. Okay. Well, then place an order to buy it back at, $4 or whatever that is, and then just go. And, either it's going to, go against you and your max loss is 350. Okay. Or you're going to get your target hit, or you check it, or check it, you can check it and see what's going on. Catherine, oh, that's great. So you'll find too. So I mean, look, I love trading futures. I spent years day trading futures. Dear God, it is so much easier trading spreads on the SPX. So, and my answer to the getting over the whole futures thing is very simple. It's like, oh, here's a trade that's going up. I could trade 10 ES futures, right? Woohoo! Or I could just sell like 25 spreads on the SPX. And, even if it's a 30-point move, I'm going to make more on this. But the beauty of it is, if there's a 20-point move against me, I can chill on this. I'm not going to panic. Whereas this, I'd get stopped out. So I like futures. I'm just finding that, I'm really getting honed in on the idea of that there's ways to make money in the markets that aren't as hard as what I was doing previously. And if I can make the money on an SPX spread versus, trying to get that euphoric high from timing the highs on the futures, great. I don't care. So it's really just honing into the idea of really not caring about being right. It's just finding the optimal way to extract cash from the markets and protect your cash once you've extracted it. Yeah, no, I mean, I'm with you. I like the futures too, and they are stressful. One trick you can do too. There's a fun little thing if you do like futures. Towards the end of the day. So here's the other thing about the SPX. It trades almost 24 hours, the SPX options. Now, I rarely do something pre-market, but the SPX options do trade almost 24 hours now. Has anybody tried trading them overnight? But if they're down pretty far in the morning, you can do a put credit spread, that kind of stuff. Oh, only on IB. Okay, that makes more sense. Okay, that's kind of dumb. You would think that at some point that they would allow that. Yeah, okay. I think one time I was trying to get a fill, and I didn't see anything. The other thing I found too is that trading at night is kind of, there's better things to do. Okay, so here's a trick on the futures. If you guys trade futures, you'll like this. All right, so you guys know that there are futures on ES options, right? So guess what? As you get, in the last hour of the day, the the premiums start to drop quite a bit, right? So of course the spreads right now are, they don't make any sense, right? But here, this is what I'm talking about here. So let's say that you think, the futures are going to puke into the close and it's 230. So if you short the ES futures, right? So you short the ES futures. Now, it's kind of hard to hold on to, especially if it rallies 20 points against you or something like that. But if you so let's say I short the ES futures at 37.57, right? But then I buy the 37.65 calls, okay, at 230, and if they're slightly out of the money, they're probably 4 points, okay? Now you can just walk away. So if it does rally, okay, well, your loss is limited because you've bought calls, and they'll just cancel each other out. You'll get assigned here, and they'll cancel each other out. And then if it falls, obviously you don't make, you lose the premium here, but then you make all the money. So it's just a nice way in the last hour or so where you kind of put on it's almost like doing a spread, but it's got unlimited potential on the direction of your futures contract. Does that make sense? So basically instead of going, oh, I'm going to short the ES with a 10-point stop, right, which guarantees you're going to get stopped, you can short the ES and then buy a call option, which, a little bit out of the money, it's the equivalent of a 10-point stop, but if it rips your face off and rallies 30 points, you're still only losing 10 points. And then, from here, it could roll over and die and you make money. Yeah, it's kind of like, it's kind of like buying a put. It's just that the nice thing is that you don't have it's kind of like buying a put. Yeah, you just kind of have that on the short future. You just have, you don't have to deal with the premium decay and stuff like that too. And if things are kind of hot and heavy, but I've done that. I like that. If you want to get really technical, if you think the market's going to rally, there's a fall. You know, and then when it starts to turn, that's where you could buy your protection. And I've done it before where you actually can set up a trade where you lock in a guaranteed 2 points. So it's like you buy the put, you get the decline, the put increases in value, and then you buy futures. You literally could lock in a 2-point profit no matter what happens, and then from there, if it goes your way. So there's some fun things you can do with that, if that all made sense. Yeah, so the futures options will expire at 3 o'clock as well, but the futures, of course, can keep going. Yeah, absolutely. So the moral of the story of all this is that and this is what, my inspiration for this class too, was that you really just hone down to, let's just say, and just for math, I'm just going to make, let's say you have a $100,000 account and you want to make, and your goal is to make 2% a day. Okay. So that's $2,000. So, what are the different ways to do that? Well, we could buy out of the money calls on Tesla. We could buy gold futures. We could buy ES futures. Or it's like, you could do an SPX spread, right? And the nice thing is on something like this is like, okay, on a $100,000 account, how many contracts do you do? I find that typically it depends on the width of the spread. We talked a little bit about it on the Saturday class. And then, on something like this too, the main goal is just, it's not that every day you're going to make 2%, but if you can figure that out on average. Now this may be a stretch, right? Because part of this is also, if you're really nervous trading, then dial it back to 1%. Okay. Or dial it back to 0.1/2 of 1%, just to kind of get your feet wet. That's $500 a day. Right. So just start off with what's comfortable for you and then build up. The only advantage that I have over someone else is that I've been doing this so long, is that my intestinal fortitude is super strong. Like I can sit through moves against me. It doesn't bother me. I'm not saying it's awesome, but I can trade larger size because I've over time, that's a muscle that I've developed. And so whereas on a $100,000 account, I could be comfortable trading a 10 lot, $10 wide SPX spread. I mean, that's super comfortable. Someone else may look at that and say, oh my God, that's freaking me out. Great. Trade, trade five, just get it to where it's comfortable for you. And then just you can gradually increase it. If your goal is 500 to 1,000 a day on a larger account, okay, so if you have a 350K account, right, and your goal is $1,000 a day, what's the most conservative way to get there? Well, it's a good question. You don't really need to do too much. Your main goal here is not to do anything stupid. I mean, just to be frank. So, what would be stupid? Well, I'm going to sell, a naked SPX put that's $40 away. Okay. Why is that stupid? Because let's call it 80% of the time it's going to work great. And then the other time, it could turn into a nightmare. So I'd just say on something like this, you got to remember if you did let's say you did a $10 wide spread, slightly out of the money for $3 and bought it back at $2, you just made your $1,000 goal, right? So I would say that the main thing on something like that is just to be patient. You want to be patient. And I think those snapback trades are actually, a good way to go because they can happen pretty quickly once the snapback happens. And but the idea that that's something that you could do with one trade a day, I mean, makes a lot of sense. Yeah, and if you're down 90K on the year, I mean, the best advice I can give you on that, because I've certainly had shares of drawdowns, is just you gotta stop thinking about it. Because if you're thinking about it, then you're dragging that emotional baggage with you into the next trade, and what's going to happen is $1,000 isn't going to be good enough because in the back of your mind you're like, shit, I'm down 90, right? And so you're going to poo-poo that, and that's going to turn into another large loss. So you just want to, chalk it up to R&D, research and development, okay? And just when you're trading, just make tomorrow day one of your new trading adventure, your $90,000 in losses. That's your research and development, and go forward from there. I know it's hard. Don't get me wrong. It's something like this is that we mentally it's with us, but if you don't let it go, it's going to drag you down. So clean slate. It's the best gift you can give yourself in trading and in life, is to give yourself the gift of a clean slate. I know it's hard, but I promise it works. Oh, The Secret Life of Banking and Real Estate. Is it not on Amazon? I mean, that's the only place and unfortunately I don't think you can get it with yeah, so you just have to it only comes in hardcover. So you just have to get it off of Amazon. Okay. So let's do this. So I know, so this was of course day 2 of live trading. What I'm gonna do is I'm gonna take some screenshots of today's action, which was pretty slow, but it's also kind of good to see what works and doesn't work, in a slow day like this. Um, Also some of the trades that we did this week and last week in the options room. And I do want to reiterate that even though that this is the last day of our live trading day together for the class, this is the trading I'm doing in the options room. So, I want just think of it as, again, everybody in here should have, if you're not already a member, which is fine. Part of this class, we purposely wanted to make sure that you did have time in the options room just to be able to continue, hey, here's another trade that I did on this. Do you see what I did? Or do you have questions and things like that too? And so, stuff like this, the thing about trading is it's like golf. And I use golf analogies, even though I think I've played golf once since we started having kids. Um, who has 5 hours when you have 3 kids? But, in golf, basically, you got to practice your swing, and you want to practice it with someone who knows what they're doing. But then you just got to like clear your mind and kind of zen out for every swing. If you hit the ball perfectly the first time, but the second time you're distracted, you're going to have a shit swing, right? In trading, it's the same thing. It's repetition. As Arnold Schwarzenegger would say, you got to do the reps. But it's that repetition. It's like, okay, here's another setup. I took the trade. All right, what did I do right? What did I do wrong? Sometimes you're going to do everything right. And guess what? It's not going to work. That's called trading, right? It just happens sometimes. But when you get into kind of a groove like this, and then it's like, okay, you know what? I was in the zone, I reared back, and I sliced the ball. Okay, sometimes that just happens. What did I do? Okay, next time I need to, loosen my hands a little bit. But you gotta, take the trades, because it's like the more you hem and haw and wonder if this is right or not right, the harder it's going to be. In the beginning, and I'm not a huge advocate of paper trading, because paper trading, you don't have any skin in the game, and if you don't have any skin in the game, you're usually going to do pretty good because your mind is neutral. But remember that when your mind is neutral, you do so much better, right? If it's, when cash is on the line, we start stressing out, we start doing stupid things. So I would always encourage people, firstly, trade smaller than what you think you need to. I found a lot of times when people cut their position size in half, they actually make more money because they have less emotional reactions to the market. So, get over the idea that you have to have big trades. What you want is consistent trades. If you're, and I know if you've got a, especially, using $100,000 account as an example, of course, don't get me wrong, we'd all love to, buy a bunch of options on GameStop, and at the end of the week, our $100,000 account is now $300,000. Okay, but in light of that, what if it could grow, $500 a day? $500 a day on average. That's $2,500 a week. That's $10,000 a month. That's $120,000 a year. That's some decent cash. And so it just makes us, makes you realize, like, how important it is just to do something that's consistent versus looking for the next big thing. And part of why I like doing this on the SPX is I'm saving so much time looking at charts. Oh my God, what's this doing? What's this doing? What about this? And, not really having FOMO or anything like that. And if you like to trade stocks, which is great, guess what? When I think last week I did a trade on Tesla, I triggered it off the SPX. Like, the SPX had a great signal. I sold put credit spreads on the SPX. And, I looked at Tesla. Tesla's moving kind of the same. So I bought some calls on Tesla. I don't do that a lot because I want to try to keep it pretty simple. But, the point is, I wasn't tracking Tesla. I was tracking the SPX. So goes the SPX. So goes pretty much almost every stock. So it does end up saving you a lot of time from that regard as well. All right. All right. So my action items over, the next week or so. So remember, you have access to the class folder. I am going to update the slides in there with what we talked about today, with some more examples, also with some of the SD versus regular versus the squeeze, which we talked about this morning. And then, again, remember, there'll be ongoing kind of education and trading in the options room, where I'll be, if I'm on the mic, I'll be talking about the setup. But more importantly, sometimes people get frustrated. It's like, oh my God, John's not on the mic this week. Well, I do have other things sometimes I'm doing as well. But even if I'm in a hotel, like I know in 2 weeks, like I'm going to be in New York, like the whole week. And so it's likely I won't be on the mic. But guess what? I'm going to be trading. While I'm in meetings, I'll be trading. I'll be looking at my charts. So I can't get on the mic. But if I see a really clean setup, I can certainly post it in the room. And so if I'm not on the mic, it doesn't mean that I'm just like long gone. And then now there's other times, like there's going to be the second week in November. Yeah, I am going to be out because I'm, that's kind of my wife and I's anniversary, and we like to get away from and go to the beach and unplug. So yeah, and then I'll make it clear when there's times I'm going to be out and I'm gone, and then there's other times I'll be out but I'm not gone. It's just like I'm stuck in a board meeting or something like that. Oh, nice. Yeah, so good question, Jonathan. So will you use the quick hit system at some point when the market is strongly trending? I mean, the answer is yes. If you think about it, it actually, what I like about this is it doesn't really matter what the market's doing. Now, if the market's strongly trending, will I also probably do like some swing trades again? Like, oh, I'm going to buy these calls on Google 3 weeks out. Yeah. But, this daily SPX stuff, I wouldn't be willing to give that up, because even if it's a strongly trending market, there's still going to be fluctuations. No, so yeah, so look, if the S&Ps are trading 50 points higher, the SPX opens up 50 points. So yeah, the ES is it's just showing where the SPX essentially is going to open. So it won't does that make sense? So yeah, there won't be like this coming together or anything like that. It's just the SPX when it opens, it'll gap up about the same amount of points as the ES. Yeah, so tomorrow morning we got the jobs number. And we're in a situation where bad news is good news. So if it's bad news, meaning that the employment number is a little worse than expected, we're probably going to rally. Because bad news is good news. Bad news means that the Fed may step us into quantitative easing, or at least, not tighten as much. Now, for some reason, the employment report is way stronger than expected. That would be bad news. It's like, oh my God, the Fed's going to have to keep raise rates to 7%. So that's kind of the nature of the market we're in. Ultimately, I do think we're going to rally into like mid-October. So let's call it another week or two. So I don't think this rally is done yet, but I don't have a position for it. Like, I think after tomorrow, I may put on some type of maybe a butterfly near 4,000 or something like that. But I got to tell you what, trying to figure out where this market's going to be 2 weeks from today, there's a lot of easier things to do in life. And so I just, I love the idea of just being flat and waking up tomorrow and just waiting for the next signal, no matter what happens. Roughly how many SPX points is that 40%? Well, it's a good question. It's not specific because remember, once it starts going in your favor, you have premium decay going. So if you want that 40% to hit fast, then you need about, it's typically if you can get it, like I say, a 20-point move in the S&Ps, you're going to get that 40% hit really quickly, but you could also get your 40% hit on a 10-point move in the S&Ps. It just won't, it'll take longer for that theta decay to kick in. So if that makes sense. So I find that typically it seems like trades typically are like 30 minutes, 30 minutes to an hour, depending if the market's moving fast or slow. Yeah, so could you use them for swing trade? And the answer is yes. So, like this 30-minute chart, remember the 30-minute chart here? We do not use this for day trading because it is, it's a lot slower. But, if you're watching this and say like, okay, we're coming down, like on a 30-minute chart, we've got all these other oscillations, right? So we rally back to the 8 EMA and we get some sell signals. Great. That's a continuation to the downside, right? From a swing basis. You can see we had this big rally here. That was that was the CPI. So, that was kind of but here, here's this rally back into the 21 and then great. We got the sell signals here. And so, just it's kind of a similar idea, except that we are just looking for some of those bigger moves. So any trade, if I took a trade off of the 30-minute chart, I would expect to be in it for like a week. So, if it's Monday and there's a signal here, yeah, I might sell put credit spreads here for Friday expiration because, I'm looking for a bigger move. Are there times that you get into the open? Okay, yeah, good question. So if we are in a downtrend and we gap up less than 1%, then typically I will look to sell a call credit spread on the first down arrow that I get, and vice versa. If we gap down, ideally like 0.5%, you want to, a 0.5% gap down, so, like this, we had a big, we had 2 big up days, right? And then when you gap down, it's kind of like, you're kind of looking for it to, to keep going. And then same thing here. If you're trending down and you gap up, you get that down arrow and bam. So gaps are great. It's just that you don't want to fight a big gap, but if it's like, call it, I mean, the ideal gap's about 0.5%. So in this market, that means that's about a, give or take about a 20-point gap in the S&Ps. Yeah. So the other thing you can do is once you kind of understand the method behind the madness, this 1 minute chart, of course, is just a heads up, but you could turn this into a 3 minute chart, right? And have the 3, 4, 5. So you could have it a little bit stronger. So you could play around with that too. Again, I always encourage people, go ahead and tweak it, play around with it. You may find something that works a little bit better. But remember, at its core, the idea with this is pretty simple. And I always like to go back to like, this is the chart James used, and this was kind of a, again, kind of a ugly day. Even he came in here. He's at home today. He's like, man, that's some pretty choppy action. But something like this where we're falling, and we get an arrow. That was his bread and butter over the summer. This is like, a move from 37.40 back to about 37.65. That's great. And then, same thing if you get 0.75% away up here, same thing. And so that's just kind of the idea. Yeah, I can clean up James's chart. I can put that in there. It's just, again, it's what you have right now. It's just stripped down to its bare essentials. Yeah, okay, so really good question. So what about, if we take a quick look at some larger time frames, right? Well, if we look at the, bigger picture here, so here's the S&Ps, right? And, oops, at ES, or let me do SPX.X. And let's do monthly chart first. So one thing to keep in mind, so this is a monthly chart, right? And if we look at this, it's kind of like, oh, well, geez, this is where we were at the bottom of March 2020 during COVID. So, it's not that bad. It's, it's not that bad. But the strongest rallies you're going to get is when a monthly squeeze fires, and then typically you just really have the wind at your back. You just buy the dip. Now, even in this situation, I would still do SPX trades. Anytime there's a dip, you just sell the crap out of some puts, right? This one here obviously is pretty fantastic. So right now we do have a squeeze developing. Okay. Is this going to fire short? If so, we're going to see some more downside here, or is this going to hook higher? We don't know yet. It's not pretty. What about the weekly chart? Same thing here. This looks pretty ugly. In fact, typically how this would play out here is that, any rally here would be shortable with the idea that this squeeze is going to fire off short and we're going to make new lows. And in fact, I think that's exactly what's going to happen. Now, do I, if we do, let's say we rally to 39.75, which is the 21 EMA, and I actually, believe it or not, I think there's a decent chance we could get there this month, then yeah, I like the idea that to establish some short trades that we're going to roll over and die. But also we could roll over and die and we could still catch trades every day doing, spreads and not have the overnight risk to worry about. The thing about a down market is you could sit there and say like, wow, I'm making money on the short side. 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 Oh my God, I just got my face ripped off. So the strongest rallies you're ever going to see are going to be in a bear market. So the short side is hard. When you get, so just remember, if you get too extended, it's good to take those profits on the shorts as well. All right. Yeah, no worries about it. And I will post trades, it's like, again, I'll as I go through and I post trades to the options room, I will post them in a way too, just that kind of say like, and what I'll try to do too is I'll post a screenshot of the chart. and say, all right, here's the snapback setup. This is the put credit spread I'm selling, kind of slightly in the money. Here's my target, and I'll post it. And then that way it's just kind of oh, okay, yeah, great. That's one, to take and stuff like that too. And then I always encourage people to, like, don't try to overcomplicate something that's working, but certainly make it your own. We all bring different experiences to the market, right? We all have different areas. And it may be something where, yeah, you prefer to do these with ES futures. Okay, awesome. Or, you would rather do this by just buying spiders or shorting spiders. Awesome. That's fine. How much weight do you put on a squeeze while looking at a quick hit setup? Okay, awesome question. So on one of these, here, well, let's add it here. So the thing on the, I talked about the 30-minute chart earlier. I like to know what's going on there. So for example, there is this great 30-minute squeeze long here. So I want to know that, it's like, oh, wow, we're off and running. Okay, so this makes sense. And then right now we're kind of in no man's land. Nothing too interesting. Where everything's rolling over. And of course, we do have the employment numbers tomorrow. So what about, like on the 5-minute chart? Is it worth watching it? I do like watching it on here because it does kind of, it's that a little extra added reminder. Now again, today was pretty choppy day, right? The other day, so you might see something like this where it's kind of like, okay, we're coming. That was an overnight, so that's not. So like right here, okay, so we're coming back down here, right? And we're coming back down for a continuation trade. Well, I can look down here and say, wow, there's a squeeze, and we're above zero here. So the idea that this is going to continue higher makes sense. Now it made sense without this, but if you're used to the squeeze, that is kind of a nice little added thing. Okay, or you can see we're up here and we're rolling over and the squeeze is firing short, right? Oh yeah, okay, that makes sense. So yeah, if you're familiar with the squeeze, throw it on there. Just don't, again, don't make it more complicated. And again, just the idea here is just to keep it simple, grab our 40% of the credit received and get the hell out. That's all we're trying to do. No, so that's good. If I'm looking for a credit, I'm looking to get 50% of the width. Not quite. You need to go actually pretty deep in the money to get 50%. So and it depends on the width of the spread. So the wider the spread, the less percentage you're going to get. So I find, percentage wise, typically on a $10 wide spread, it's 450. Okay, so 45%, right? On a $15 wide spread, it's 650. So that's going to be like 43%. And then on a $25 wide spread, it's 10, give or take, which is 40%. So on the $10 wide, if I got all that right, so on the $10 wide spread, I'm getting a better percentage. So the wider the spread, you're not going to get as good. So yeah, so I think, probably 40% is a good ballpark number. Yeah, Deepak, that's great. So there's other tools that we have like top hats. I think it's an awesome idea. So there's things like that you can certainly combine, especially for those extreme kind of things. Will I ever use a 15-minute chart? So it's a good question. There's not really a reason why not to. I do like the 5-minute chart just because it's, you get that 5-minute quickness with all these other oscillators. Maybe the 15-minute chart is the way to go, right? Or the 10-minute chart. Maybe the 10-minute chart is the way to go. So there's certainly one of those things where there's certainly room, right, to kind of play around with it to an extent. Do you have the trend rotations or squeeze rotations? So I keep them separate. So here's the squeeze rotations, right? And then here's the trend rotations. I've thought about combining them on the same grid, but it would absolutely be too many arrows and dots. So if I did that, I would probably disable one of them for the arrows and dots. And I think, again, you know, the nutshell part of this too is, remember, the trend rotation reg or SD will give you faster entry signals because they cross faster, but you're also going to get more noise. And so I do like, you know, the histogram is kind of cleaner. And again, you got to, you know, today was chop hell. So, you know, you're going to have days like that too. Oh, nice. Yeah, CCI rotation. All right, guys, it is 3:45, so it is time to wrap up. You know, thank you for joining. Again, just to reiterate, you know, even though this is kind of the last day of our live trading, it's not the last day that we're going to be working on this together, because I will be, you know, posting some more stuff into the class folder based on some of the questions today. And of course, I'll be focusing mostly on this in the options room for the foreseeable future. And I'll make it a point that when I do post a trade to also post the chart, so you can kind of see what I was looking at. And also too, if you see a setup and I'm not posting anything, that doesn't mean it's not a good trade. I'm not going to be able to post every trade, every signal. But you know, typically in a perfect world, I'm doing at least one, up to 3 trades a day. And you know, and if my first trade's a winner and I'm up 2% on the day, then I'm going to be, you know, I'm going to be careful. I'm going to guard my cash. And you know, just things like that. So it's a combination of keep it simple, manage that cash, and all that kind of fun stuff. All right. All right. Have a fantastic evening. And like I said, I'm gonna need the weekend and probably early next week to finish what I want to add to what's in the class folder, but it'll get there. And then of course, you know, for those, you know, and I'll see you guys in the room too. All right. So have a great night, and we'll see what we have in store for tomorrow.